I have Amnish Aggarwal, Head of Research at Prabhudas Lilladher, joining in now on the market setup, his fundamental calls. Amnish, yesterday we did see some pickup in the FMCG pack, and I ask you about your view on the FMCG, particularly for three reasons. One, the electoral success of the Ladki Bahini scheme tells you that maybe the populist electorate is back, which means more money in the hands of people, positive for staples. We're also in the third quarter, which is seasonally the strongest, and we did see a decline in oil prices overnight. All of this, does this give you enough confidence to go back and buy FMCG staples, or maybe still take a brief pause?
See, hi Mangalam. Actually, the impact on FMCG is not due to, say, one single factor.
Yes.
Now, if you look at, say, some of these welfare schemes, they were earlier also there. And for example, in Maharashtra also, I think it is there from past few months. It was introduced in Jharkhand a few months back. It is there in MP. So some states are having it already from past many months. And going by that logic, there should not have been any pressure. So that is one. Secondly, as per the, you can say, the corporate commentary of various companies, the pressure has been more in urban areas, and that too, I would say it is not at the bottom end of the society. You can say it is more like lower middle class, which has been impacted more by inflation. The third thing on your edible oil prices, if you look at, say, past 6 to 7 months, edible oil prices have been moving up gradually, whether it is palm or the other edible oil stable. Now, just a correction of 1 day or two doesn't mean much. And on top of it, we had seen increase in the import duties by roughly around 20%. So a simple correction of a day or a few days, I think it is not going to change the consumer sentiment significantly. For example, your wheat prices are already at 3,000 rupees per quintal. So I think there is overall some softening when it comes to, say, your fresh vegetable prices and all, which obviously will provide some relief. But as far as your corporate performance is concerned, have we seen the bottom in terms of, say, volume pressure or margins? Maybe yes. But are we in the optimistic phase where people used to be, say, 2 to 3 months back? I think we are still away from that. It's going to be very, very, I would say, stock-specific approach with slightly longer term in viewpoint, because we should not expect the recovery to be absolutely V-shaped. Because this quarter, we have seen things going down. Before that, everyone was too gung-ho on the sector. And suddenly in 2 months, I think things are not going to take a completely U-turn.
Sure. Okay, so that's a call on the consumer space. Let's talk about engineering capex and infrastructure as well, because yesterday this part of the market was absolutely lit up, right? After the Maharashtra outlook. But it's not just the Maharashtra sentiment, Amnish, to be fair. Look at just the order flow announcements from yesterday. Cabinet is announcing almost 8,000 crores of fresh orders for railways. Then we had this big HVDC announcement from Hitachi. They're setting up this connector between Gujarat and Maharashtra for evacuating renewable power. There are announcements from Power Grid. They've won some contracts in Rajasthan. So there's a lot of activity on ground as well. Anything you like, anything that you would be willing to buy now in the capex/power/infrastructure space?
Okay, see, capital goods and engineering, it's a long-term story. Because if you look at the various plans of the government, ranging from, say, increasing your overall renewable power in the country, whether it is energy transition, setting up, you can say, grids, roads, water, sanitation. So everywhere, I think the capex is going to be humongous. Now, what is happening is that in the first 6 months of this year, the capex actually done by the central government, that has gone down because of elections, too much of rains, heat wave earlier, etc. And as we stand today, to meet the annual target of government, we need to grow capex significantly by around 50% on an annual basis for the next 2 quarters. Now, similarly, due to elections at the central level and at the state level, the ordering was also delayed, because due to the election code of conduct, in certain phases, you can't give even the fresh orders sometimes. So I think over the next few months, we will see the big announcements coming as far as your entire infra cap goods space is concerned. And I think this is one space where even now your profit as well as top line growth momentum is there. And in this space in particular, you see companies like ABB, Siemens, they are structurally, you can say, great buys, big companies in terms of technology, in terms of where there are placed to capture this entire transition which is happening on the infrastructure side. But in addition to it, I think we like stocks like L&T is there, then Triveni Turbine is there. Okay, but this entire pack, I think it should do well over the next at least 2 to 3 years.
All right, L&T and Triveni Turbine is something that we'll keep an eye out on. Do you have any particular railway stock that you like? Because all of them have seen a correction of anywhere between 30 to 40% from the highs. At one point, they were overheated, but over the last couple of trading sessions, we've seen them come back. They're backed by some of the order wins that we're getting for a few players as well. And this morning, there is news that the cabinet has given a nod for projects worth nearly 8,000 crores for 3 railway projects. Do you think they warrant a fresh look after this correction?
I just missed the initial part. Which stock you are referring to?
The railway stocks.
Okay, you see, railways also, as I said, the order inflow was very poor for the first few months. And in railways also, the plans of the government are to increase the overall connectivity first and improve the, you can say, do a lot of investments on the technology side. So I think the order momentum in railways is also going to pick up significantly as we go along. And many of these railway stocks, first they were overheated, as you said, few months back. Particularly many of these, you can say the EPC railway companies, but post that they have corrected to more reasonable levels. But having said that, I would be very selective in buying that because many of these companies, I think the growth is going to be there. You can easily expect many of these companies to give you 15-20% growth, but I will be very hesitant to go and buy many of these stocks if they are trading at say 40-50 times multiple.
Okay. All right. Amnish, thanks very much for that.